Hey team, what's going on? So this approach has been working great for us. So I want to make sure that we record this so that everybody can see it. Okay. All right. So this week, it's the week of March 10th. Let's do our Mindset Sunday. Let's do our market outlook and see what's going on. First, let's start with the news, and then we're going to match it up with the technicals. All right. So as we can see tonight, we have GDP news for the Japanese yen. Now, what we want to do, we don't want to just collect a bunch of information. That means nothing to us. We want to collect information and say, how can that affect the charts, right? Japan they're a major trade partner with Australia, right? So tonight, if that GDP news is good, we could see AUD USD go up, right? And that would means the Australian dollar is gaining value because it is piggybacking off the Japanese yen. And if AUD USD is going up, that means the US dollar is being sold and the US dollar is losing power overnight, right? So good news for the the GDP for the Japanese yen, right? Means that it's good news for Japanese yen, bad news for the US dollar. AUD USD goes up, USD JPY goes down. On the opposite side, if the news is bad for the gross domestic product of Japan, the we could watch AUD USD go down. We could watch USD JPY go up. All right. So in terms of our options and stuff like that, let's see here. Monday's a very chill day. We don't see much news happening on Monday, and when it's a very chill day to start off the week, that means most of the time the market is going to swell in anticipation for the next major news event. All that means when it comes to technicals is that we can see a lot of consolidation, consolidation, consolidation. So I know we're excited. We're coming off two excellent weeks in a row, two like spotless weeks in a row. Now, let's not be so anxious where Monday we're looking to, put so much money in the market, make big moves because there's no economic events happening in that state. That's what we should be doing. All right. Tuesday. Now let's look at that. We don't have to wait long, right? Look at this Tuesday. We have a bunch of news happening for the Great British Pound that morning. I will look to GBP USD if I'm trading currencies, right? We'll look at that. And if you're up that time, a lot of our West Coast people, this news is coming out like 2 or 3 in the morning. If you're up that time, 2 or 3 in the morning Eastern Standard. So a lot of our West Coast people, if you're awake, GBP USD would be great to look in. If this news is negative, all this news is coming out right here, right? Unemployment rate, employment change, claimant count change. This is nothing but just how many people are filing and claiming unemployment, right? Um, if that news is negative, then GBP USD could look to go down. If that news is positive, GBP USD could look to go up, and that would mean selling of the US dollar, right? Then we get here. Look at this at 8:30 a.m. Eastern Standard. We have consumer price index. That's fancy terms for inflation, right? So basically, they're looking to see is inflation going up over the month, over the course of the month over month in February, and year over year in February. So right now, the previous inflation was 0.4%. They believe it's going to drop to 0.3. For the year, it was 3.9. They think it's going to drop to 3.7. If the numbers come out lower than that, right? If the numbers come out lower than that, that's extremely bad news for the US dollar, but it's good for us because it means that inflation is coming down. And remember, the Fed, everybody, all the central banks, they want inflation to come down, right? Right? Like they want inflation to come down. This election year, they want inflation to come down. How that would affect SPY if inflation drops down, SPY could go up big time, very, very, very big time. SPY could go up. If inflation drops down, SPY could go up. All right. Now, if these numbers come out and they're exactly like they're printed, if the consensus is zero point 0.3, bam, and 3.7, and they come out as is, right, it's still a win for SPY because inflation dropped. Now, if inflation comes out higher than expected, right, then we're looking at a situation like, Oh, wow. Now that could be very unwelcoming for SPY. We could watch SPY drop. So let's combine our technicals with that. So now on the technical side, here's what we're looking to see. Okay, so we have the first thing I'm going to do is I'm going to look at where's my last inverted head and shoulders, right? So I'm going to mark this area off right here, right around the 508, 509 area. That's my last inverted head and shoulders right here, right? Bam, I'm just going to mark it off. Let's see. It's the second shoulder of inverted. Head and shoulders. I'm just going to mark that off right there. Bam. All right. So now that's right around 510. Price is currently at 511. Right. So it's not a bunch of room between here and there. Right. So if price drops down to here before Tuesday's news happens, right? Let's say Monday, it just Mosey just way on down to here. I'm looking to enter a call that expires that Tuesday or later, right? I'm looking to enter a call that expires that Tuesday or later, Tuesday, Wednesday, Thursday, Friday, whatever you can afford. Because if the inflation news is down, right? If the inflation news is down, our costs can go through the roof. With saying that, I'm also looking to straddle it with a put. Now, my put, I want to be a little further out the money and I want to be about 70-30. When I say 70-30, meaning I want to put about 70% of my finances towards the call. And if you have questions about, any of this, make sure you drop it under the video on YouTube, right? And I want to put about 30% on a put. So if I had $100 to spend on this move, I would spend around $70, around $50 to $70 on a call, right? And then about $15 to $30 on a put. Okay. All right. So that way, because look, if that news is negative, we could watch price drop below the head and shoulders and get back down towards the 505 type of range. Okay. All right. So let's see here. So yeah, this is marked off perfectly. So watch this area right here. Watch when we turn this into a 15-minute chart. Bam. Let's see if we're able to see some type of markups. We have shoulder, head, second shoulder right here. Look at that. So that's the second shoulder of an inverted head and shoulder, okay? So remember, if price drops down to here, I'm looking to enter a call that Monday. That Monday, I'm looking to enter a call and have that call expire either Tuesday, Wednesday, or later throughout the week. Now, here is how you can price and see what range you can get your call in. If price drops down to 510, look, it already created a ceiling and showing you where price is respected. So anywhere, make sure you're within your budget, but anywhere between 510, right, to 5.8 to 517, right? Anywhere between 510 to 517 is the area that I'm looking to place a call in. All right. And so now, look, I almost said drop a one in the chat. But let's see here. Let's see. Now let's go to Wednesday. Wednesday, more GDP news. Once again, the market's going to be reacting still from inflation. So not much going on Wednesday. But by this time, we'll be able to see new floors have been set, new ceilings, new order blocks are being respected. Excuse me, maybe not new ceilings, but new order blocks are being respected. Price will be building, so we just let it build, right? We might be in a call that expires later on that week. We'll also look at some earnings plays that we can make too after inflation comes out. All right, then Thursday, right? Producer price index. This basically means how much are producers, paying for their goods. Is that price staying stable? Is it dropping? Is it going up? So you can check what that means right here. You can always click on FX Street and actually check what each one of those means, right? Also, Big stat, especially for Forex, is retail sales. Now, this means this is just an honest gauge of how people are spending money. So it's springtime. Let's see, month over month, how many people spent money in February to the tune of what? Did the retail sales go up or did they go down? Right? Based off of this, you could make a nice move on USD CHF, EUR USD. If that news is negative, right? If that news is negative, you could look for sell opportunities on USD CHF, right? Or buy opportunities on EUR USD. If that news is positive, you can look for buy opportunities on USD CHF, sell opportunities on EUR USD. We always want to make sure our price is playing off a larger order block, though, right? So I like, especially in Forex moves, I like for a price to be playing off of 4 hour moves, I mean 4 hour order blocks, daily order blocks, or a staircase of 1 hour order blocks. So when we say a staircase of 1 hour order blocks, we basically mean this right here, right? A staircase. So let's say we're going for a sale. So if we're going for a sale, let's use red. In fact, since green popped over, let's use buy. So let's say we have an order block here, order block here, order block here, and then we see price coming back down, retesting, engulfing, and respecting this, right? It's going to be hard for the bears to break through and keep going down because we have order block on top of order block, right? So that's a staircase. That's a staircase of order blocks on the 1 hour. Same for the bearish movement, right? Same for the bearish movement. Order block, order block, order block. So I like at least two sets of order blocks, two staircases of order blocks. 1, 2, 3 is even better. The more you have, that's even better. So let's say price breaks down, retest, and then we get a bearish engulfing here on like the 15-minute, 5-minute, 15-minute. But you see these 1 hour order blocks stacked up like that. Bam. And the news is going our way, right? That's when I want to go ahead and put in my move. All right. All right. So let's see. That gets us halfway through the week. That gets us halfway through the week. Okay. Thursday. Yep, Thursday is our retail sales day. And honestly, after that, we'll see how the market is developing and we'll be done made so many moves through this week, that Friday we can honestly chill. Right. That's the goal, especially for our new people. Um, you know, we want to make sure you don't get traders high. So what I mean by traders high, and this is Mindset Sunday, so we're going to make sure we equip you with the mentality. Traders high is when you start winning trades in a row, trades in a row, trades in a row, and then you're excited. So now you're looking for a reason to put money into the market instead of letting the market give you a reason to invest. That's a big thing. So a lot of times it'll be like a Friday, not much going on, or just, count your wins and enjoy your wins, pay yourself, spend it, pay yourself first and foremost, right? And spend it wisely. Well, instead, a lot of new traders, when you don't have a mindset meeting like this, you're like, oh, what else can I do? What else can I do? And then we start getting into the area where we start trying to assume the charts instead of letting the charts confirm and just tell us what to do. That's when that pride, that arrogance, that ego could come in and it's like, oh, yeah, I know what the chart's going to do. Yeah, it's going to go up to, and it's no reason for that. So when you find yourself on that trader's high, you start looking for, alternate sources. You start YouTube ear hustling. You start going all over the globe, just seeing if somebody is trading and they're in the market. And it's really just a symptom of greed. Okay. And we don't want to be greedy because when you're greedy, that's when your profits get snatched away from you. When you're treating it just like, a video game and you're watching numbers go up and down and you're not paying yourself in real life and things like that. All right. So, just a few things to keep in mind this week, but let's do our work early. Let's continue to be proactive and let's continue to stack on good trades, right? Another thing that I wanted to discuss, which is very practical, it is removing feelings and replacing facts, removing emotions and replacing it with analysis. Like a lot of times, thank you. Thank God that, we've been trading very well. So we haven't had many losses. But what I've seen, just from talking to different people outside of LYMG, and I want to make sure we don't have this inside of LYMG, is like, let's say that you lose a trade, right? And you lose a trade, there has to be a tangible, actionable item, a actionable thing that you do between losing a trade and going into your next trade. It can't just be, oh yeah, okay, I got it. I'm gonna look inside of me. Man, that was crazy. Yeah, I messed up. Oh, I see where I went wrong. No, because what the record would show, if there was a master timekeeper, it would show that you never took any actionable item to improve between your last trade loss and your next trade entry. The only thing that the only thing that changed was your feelings. Maybe you felt down, maybe you felt bad because you lost a trade, or you didn't even feel bad. You feel like, okay, it's a part of the game. So yeah, this next one I got it. You see what I'm saying? But you never actually made a move. You never actually went to the charts. So we want to make sure that when you mess up, go to the chart that you messed up on and reverse engineer the move. Because let's say you wanted a buy. Let's say you entered a call, right? And you entered a call. Let's say you had a 517 call in for this day right here. You entered a 517 call, price was in the money, it hit, and you stayed in too long, right? So by the time you went back and checked, price was down to 511. And instead of making several hundreds or thousands of dollars, you lost several hundreds of thousands of dollars. Instead of just saying, yeah, I stayed in too long, so next time I'm not going to stay in as long. Go to the 5 minute and actually see where you could have done better in your technical analysis, right? Because here's how I would do that. Let's say I stayed in too long. There's a technical analysis clue that's going to tell you exactly where you messed up. So the price is building the stair steps. It hits 518. Look, it's done trending. So now after price finishes trending, meaning finishes going up or down, what is it going to do? You guessed it, consolidate, right? So now it consolidates because it's either going to build a ceiling or floor, meaning price is either going to go up from here or down from here, but it's reached a level where now it needs to make a decision. So look what happens. Price creates an order block right here, right? And now it's either going to go up or down. So if it were to go up, guess what would need to happen right here, right? Guess what would need to happen right here? If it were to go up, price would need to break up, bullish candle break up, retest down, bullish candle engulfing, and then it will continue just like it did right here. Break up, retest, engulfing up. Right here, look, break up, retest, down, engulfing up. So now, does it do that right here? No. Instead, what it does is the opposite. It breaks down, bullish retest, and then we get a bearish engulfing down. And now look, so now you would know, okay, when price started creating order block and it broke down, retest, and engulfed down, now let me get out. So now going into my next move, right? Going into my next move, I can either have one or two things happen, right? I can just have a certain profit margin that I want to hit, right? Which is good for some new people. Like if you're like, okay, hey, I put 50 in and price and my option has 2x, 3x. I'm going to take it out. Yeah, it can still keep going, it can still not. But my thing right now is building my account and getting into the habit of paying myself. You can do that, right? For vets and those who have more time on their hands, right? And you can actually watch the charts build. You can now actually sit and look and say, hey, is price okay? Price is creating an order block. Is it breaking up, retesting, and engulfing up from here? Or is it breaking down, retest, and engulfing down? So you got to know just from the three market phases, anytime that price trends, right? It's going to break out of consolidation. So it's going to consolidate, it's going to break out, it's going to trend. After the trend is over, the market phase pattern starts up over again, right? The market cycle starts over again. So now it has to consolidate, break out from that consolidation, and then trend the other way. Don't get the traders high and go, well, I know we're in an uptrend, but can I catch that move on the way down? It's like, I always say this, it's like trying to run and time up traffic and you're running towards traffic, right? It's like you could, but why would you? Remember, the biggest asset that we have is not the money, it's the time, right? So if we can make hundreds and thousands of dollars, in a couple of hours a day, sometimes within an hour a day, you don't want to push that and make your money, then you're doubling back in the market and you're assuming you're over trading. And what you're also doing is you're overloading your senses, right? We teach and we trade in a way that's going to keep showing you how to get winning setups, how to get winning setups, how to get winning setups. So imagine a basketball player that's being developed and they only watch all-time greats, right? They only watch all-time greats. I'm talking about since birth. Clip ups, game film, real life clinics, all-time greats, not just NBA highlights, like not just YouTube, like the YouTube marketing videos, but I'm talking about watching real game film and breaking down real game film, right? Like, here's what they do in the off season. Here's what they eat. Here's what they drink. That player, if they grow into it, right? If their body allows them to and they grow into it, they're going to be an excellent player because that's all they've digested. When we digest a way of trading that's practical, doesn't take a bunch of time, and that leads to consistent winning, and that's all you do, you're going to end up being that type of trader, right? Instead of trying to time reverses and trading, uh, entering puts in an uptrend, right? Just wait to the market, look, ride the trend up, wait till it retests, find out where it's retesting at, boom, enter another call, ride it up again, let it trend, then let it consolidate, let it tell you whether it's going to break up, retest, and go up, or let it tell you whether it's going to consolidate, break down, retest, and go up and go down. Then find out where that level, where it's respecting again, bam, enter another call on the way up, boom. Now, as your account is growing, you're able to get better calls. You're able to buy calls that are already in the money. You're able to buy calls that are further out in terms of expiration date. You're able to buy calls that are in the money and further out. So now your profit margin is getting wider, 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 bigger, 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 better, 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 right? But just get the muscle memory to not overtrade, not get the traders high, to never assume what there's no need to consume when the markets are always going to confirm. There's no need to assume when the markets are always going to confirm. All right. All right. So make sure that if you lose a trade, knock on wood, right, that you actually put the time in. Take 5, 10, 15, 20 minutes and see where you went wrong. If you don't know where you went wrong, then guess what? That's when you leverage the team and be like, hey, I lost out on this trade. Can somebody show me? Can somebody tell me, what happened so that I can moving forward, the likelihood of that lesson sticking with you is going to be higher because you now see you now have a monetary value attached to the mistake that you made, right? It's not just a, oh, I made a mistake. And that's what I always tell the new people, to hit the ground running, hop in trading with us, take advantage of the Clearport and take the signals rather than doing what the 88% of people who fail do. The 88% of people who fail come into team environments and isolate themselves by saying stuff like, oh, I'm not going to move until I'm super sure, until I'm this and that. And what they do is prolong the process of becoming a profitable trader, because now that's like coming into the NBA and saying, "Yeah, I know the Memphis Grizzlies drafted me, but I'm gonna practice on my own, and I'm not coming to practice until I have the playbook down and I know everything I'm doing." No, that's the whole point of coaching and teaching, right? So when you come in here, you come in LYMG and you actually take the trades with us and you're actually moving with the team, you can now look, you can get early gains, right? Gains that we've seen it. People come in, hit 300, 400, $200 on their first trade, make $1,000 within their first week, make several thousands within their first month. That same month that they would have spent studying, just trying to get motivation out the sky to study on something that's not providing a return on investment from them in the first place. So they would have to be super duper determined and super duper motivated. They would have to just be super person. You see what I'm saying? Versus it's a lot easier to get the motivation to study when you see something, when you're seeing the action from it, right? And you're seeing, oh, I see that call, and that call ended up making me X amount of money today. That call made me more today in 1 hour, then my job pays me for working 8 hours. Yes, I'm going to feel compelled to go ahead and study, get 15 minutes, 20 minutes, especially if I lose a trade, right? I want to see where that mistake was because I already know this thing can give me a great return on investment. So I want to clean that mistake up because I see how much that mistake cost me. And so now it's going to stick with you, right? It's going to stick with you because it cost you something, right? And you experienced it in real life. And you have the team here. You have the team here who can help you make sure you stay in the right mindset. But make sure that we're putting the time in. And we got to stop thinking that's time being sold to us in blocks and blocks of hours. That's what happened. When we start applying for jobs and things like that. They tell us how much we can make per hour. So we start perceiving as time. We start perceiving time as hours. So new people will hear that and go, "Well, I don't have time to be looking on the charts." That's why it's like it's not going to take all of that, right? It'll take 5 minutes, 10 minutes after you've already lost the trade and you're reverse engineering the analysis and seeing where you went wrong. You'll get to the point where you'll be able to spot where you went wrong in less than 5 minutes. All right. You'll be able to go, oh, okay, I got out right here. Look, I didn't notice price consolidated. And then it broke down, retested, and go down. I should have got out somewhere. I should have got out. Look, each one of these candles represents 5 minutes. I could have got out in any one of these 5 minute candles. That's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55. That's an hour worth of time I could have got out before the big drop. I could have seen the ceiling was forming and price was dropping below the ceiling and respecting the ceiling. And I could have got out there, So just a few nuggets. Let's get it. Let's have an excellent week. When you watch this, just come back to the main chat, the LYMG chat, and type done for anybody new who's seeing this for the first time. Tap in with us, join the LYMG family. We have a great promotion going on right now where I tell you, right, we don't want your money. Right. We don't want your money. Just have $50 where you're able to fund your own account. Have $50 where you're able to fund your own account. This is going to be a limited time offer, though. Have $50 where you're able to fund your own account. We'll get you set up. We'll get you earning with us. Make all the money that you can with us within the first 30 days. And then we'll offer you a package. Right. Then we'll offer you a membership package because we want to make sure that you're paying out of profit and not out of pocket. All right. So we need more safe spaces to learn. So that's exactly what LYMG is. Let's get it. Let's get it. Um, hey, let's have a blessed week and let's go.